Hello everybody, my name is Scott Crace, and today's important article is 4 reasons women should consider ETFs. So really, let's face it, women do control the wealth. Here are the facts. 51% or 14 trillion of Americans' personal wealth are now controlled by women. 67% of women over 50 years old share in decision-making for finances with their spouses. Women will control about 22 trillion by 2020. That's half of all private wealth. Women are set to inherit 28.7 trillion in intergenerational wealth transfers over the next 40 years. So we felt we wanted to put together 4 reasons women should consider ETFs. So what is an ETF? An ETF is a type of fund that owns the underlying assets, shares of stock, bonds, oil futures, gold bars, foreign currencies, and divides ownership of those assets into shares. The actual investment vehicle structure, such as a corporation or investment trust, will vary by country, and within one country there can be multiple structures that coexist. Shareholders do not directly own or have any direct claim on the underlying investments in the fund. Rather, they indirectly own these assets. ETF shareholders are entitled to a proportion of the profits, such as earned interest or dividends paid, and they may get a residual value in case the fund is liquidated. The ownership of the fund can be easily bought or sold, transferred much the same way as shares of stock, since ETF shares are traded on public stock exchanges. So now that we know that, the number one reason women should consider ETFs is liquidity. ETFs, or exchange-traded funds, trade intraday. They are exchange-traded just like stocks. So they have that liquidity. You can buy or sell throughout the day when the market is open. Mutual funds do not trade during the day, and the buy or sell of shares only happens once per day at the end of the trading day, after the markets close. For this reason, it makes mutual funds less attractive in a volatile market. Okay, number 2, transparency. ETFs disclose their full portfolios. Companies that represent the holdings in an ETF on public, free websites every single day of the year. Investors know what they are invested in and where their money is allocated. Mutual funds only disclose their holdings quarterly, and then only with a 30-day lag. In between reporting periods, investors have no idea if the mutual fund is actually invested or what they hold. Number 3, lower fees. ETFs generally offer lower expenses than mutual funds. ETFs have little to no trading costs, tend to require less marketing and often fewer distribution costs versus mutual funds. Mutual funds have administrative fees, management fees, 12b-1 fees, which are marketing fees, and transaction expenses within the fund. Index mutual funds are a close second, but generally ETFs are cheaper. The lower the expense ratio, the more savings to you, the investor. And number 4, the 4th reason why women should invest in ETFs is tax efficiency. ETFs tend to be more tax efficient than mutual funds because of how they interact. The mechanics of how ETF shares are created and redeemed is the true answer. When mutual fund investors want their money back, the mutual fund sells securities to raise cash to meet the redemption. This causes a reaction to the entire portfolio and affects all of the shareholders. Hence, more capital gains than exchange-traded funds, ETFs. Also, if a mutual fund or ETF holds securities that have gone up in value and then sells them for any reason, they can create a capital gain, and by law, they must pay them out to shareholders at the end of the year. So, as we discussed earlier, women do control the wealth and should consider ETFs in their portfolios versus mutual funds. If you're still using mutual funds, you would like to see how we could potentially increase the performance while decreasing your costs, then contact us through our website, www.crosspointwealth.com. Thank you for reading and sharing.